Hello and welcome back to Closing Bell on Friday the 15th of January. Today I want to start quickly to share that I bought more AMD stocks and also an ETF for semiconductor called SMH. That's what I'll be speaking about today. Now let's get back to two key points I want to speak about. The first one is data. Data is king. And this forecast data will be important next week. It's all about the Chinese GDP data, which will be announcing on Monday next week. Okay, so the Chinese GDP expectation, the median is about 6.1%. So it's on quarter four. So it's rise over the last quarter, which is 4.9%, which is good. But what we want to see is the forecast coming for next year, because it's going to determine how the economy has recovered, because they are way past the coronavirus, phase 1, phase 2, phase 3. And this is also like a little blueprint for everybody else when we recover. How the recovery will be good for Chinese, and then plus 6 months, plus 9 months later, it'll be Europe and also America. So we wouldn't find out, but it's interesting to see the forecast from a few of the big corporate analysis. So Nomura came out at 5.7 potential GDP for next year. They're thinking about the exports, it's going to be healthy, the sales revenue. ING came up 5.5%, similar scale as well, but they're a bit more conservative. Barclays came in 6.5%. So they're thinking there'll be overwhelming growth, and all the new contracts and all the intertrade that signed with Southeast Asia and Europe will be in favor for China, and also they have not even favored what Joe Biden's relation would be, and this is without that relation. So the GDP for Chinese next year will be great. So hold on to your seats and let's find out more next week. And if it's all good, man, 2021 will be a big year, and hopefully we will all get back to normal. Okay, now for the interesting one. Like I said, I bought more SMH semiconductor stocks in AMD today. Because of Intel going up so gradually high, AMD profits been taken off, and this presents an opportunity to buy $88. Okay, so I think it's an opportunity. Why? Because TSMC earnings came out, and man, they blew everybody away. They had a great Q2, Q3, and now Q4. It's really extravagantly great. 23% up. 5.1 billion revenue for the quarter alone, ground record breaking, and they beat last quarter. It shows that this work from home that people thought has stopped in quarter 3 is still pushing on. People are still buying computers, and this 5G coming out from iPhone and everybody pushing 5G is helping, and this cloud computing, cloud storage is really kicking off. It is not just a temporary measure. It is not just a temporary Zoom or Peloton temporary measure. This is in place. This is being built. Okay, the global demand, they precisely say global demand for work from home, computer boost, cloud storage, 5G has grown up. Revenue growth year on year on compound annualized growth rate will be 10 to 15% up to 2025. So the forecast for the next 5 years, they see great growth. Even better, their capex expenditure are growing from 25 to 28 billion expected. That's a huge growth, and supported by all this great tax. So all honky-dory, all good, but then we will always have some bull, always have some negativity. It's always normal human behavior. So I can see where they're coming from. So if TSMC are increasing the capital expenditure of 25 billion, it looks like they're building more plants, more sites, expanding elsewhere. They're building more manufacturing plant. So worry is if they invest so much and it doesn't come around, if this forecast is wrong, it's going to be a huge decline for TSMC. It's a huge gamble for them, for a company that's really low margin but high volume to make profits. That's where analysts are worried. So knowing TSMC, knowing their cost control procedure, which is honky superbly great. So if they pull it off, they will have a lot of clients, a lot of contracts from AMD, Nvidia, Nintendo, Sony PlayStation, Tesla, all that producing an infotainment for cars, Volvo. Globally, they want to meet the demand. They see the demand growing. And even the fact they said 10 to 15%, I think that's superly conservative. My humble opinion to you guys. So I would say buy or hold Apple. 5G, Apple phones, because they've done well. It's mainly due of them selling high growth Apple phones. So Apple phones, Apple stocks, buy and hold. Buy AMD, the opportunity, because Intel has came back up 10%. AMD has fallen up to $88. I would buy AMD again. I have bought AMD again. I would buy Taiwan Semiconductor. If you're not holding Taiwan, I can buy it. But if you can buy in your own country, why not buy it? They pay dividends. It's still growing. If not, buy SMH ETF. It covers Taiwan Semiconductor, it covers Micron, it covers Nvidia, covers AMD, Broadcom is the rest. Semiconductor, I'm a strong believer. That's why it's number one in my stock holdings. Take profits of Intel. I know Intel are coming up, offloading the work with TSMC, but you've got AMD, you've got Nvidia, you've got ARM processing, which is leading the pack. Even Apple are not using Intel no more. So I'll take profit of Intel. That's my opinion. If you're not sold Intel and it's gone up, well done to you. I would take profit, go somewhere else. Again, any cloud computing, cloud storage type companies, I've not visited which one should be the best after this news, but have a think about it. If you hold some of this cloud storage stock or cloud computing, well done, keep hold of them, it will be big. Okay, this is Friday for me. I want to have a time with my family. I hope you guys have a good rest as well, and hopefully to see you over the weekend to give you more value, more information. And remember to click like and subscribe, and hope to see you again. Bye.